Good morning, everyone, and thank you for choosing Breaking News, Market Analysis. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial News, August 17, 2023. Market highlights, equities rally, yield dynamics, and corporate performances. In the realm of global finance, today's focus turns to the positive resurgence of U.S. equity futures, indicating a potential turnaround from the setback experienced on Wednesday. Despite this glimmer of hope, bond markets around the world continue to witness a significant sell-off. The S&P 500 contracts have managed to edge up by 0.2%, offering a glimpse of recovery. However, Europe's equity benchmark remains in a downward trajectory for the third consecutive day. This market sentiment shift comes as the widely held belief that the Federal Reserve had concluded its interest rate hikes is challenged, following the release of pivotal minutes from the latest meeting that hint at a possible shift toward tighter policy. The week has been marked by striking and swift movements in the bond markets. The 10-year Treasury yield, a key indicator, has surged by 4 basis points to reach an impressive 4.29% on Thursday, approaching levels that haven't been witnessed since the year 2007. In the UK, a similar trend is observed with equivalent maturity gilts reaching a peak of 4.71%, the highest since the tumultuous financial crisis of 2008. Japan's bond market also felt the impact of investor sentiment, as tepid demand in response to a debt auction led to a surge in the 20-year bond yield. The financial landscape is currently underpinned by heightened seriousness regarding the potential for another interest rate hike by the Federal Reserve. This anticipation is reflected in the futures markets, where a 45% probability of a further rate increase by the November meeting is priced in. Notably, market participants are adjusting their strategies and expectations to accommodate the possibility of sustained higher interest rates. Insights from Deutsche Bank AG strategist Jim Reed emphasized this growing realization among investors. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Global debt sell-off and central bank's dilemma. The ongoing global debt sell-off is notably influenced by the trajectory of U.S. Treasuries. The resilience demonstrated by the world's largest economy has challenged initial projections that a series of Federal Reserve interest rate hikes might drive the economy into recession. On the other side of the Atlantic, the UK's surge in gilt yields is driven by persistent inflation and robust wage data, fueling speculation that the Bank of England may need to elevate interest rates to 6% and uphold them at elevated levels. Corporate dynamics and China's impact. In the corporate realm, BAE Systems plc has undertaken a significant acquisition, purchasing the aerospace division of Ball Corporation for a substantial $5.6 billion. This move has sparked varied reactions among investors, as BAE shares experienced a notable drop of 4.8% in London, while Ball's shares surged by as much as 5.5% in U.S. pre-market trading. Cisco Systems Incorporated, a tech heavyweight, saw its shares rise by up to 2.9% in U.S. pre-market trading due to an encouraging sales forecast that alleviates concerns over a potential sales slowdown. China's economic conditions are continuing to cast a shadow over market sentiment. Emerging figures from property agents and private data sources suggest a more severe decline in the real estate market than official reports have indicated. In prime neighborhoods of major metropolitan areas like Shanghai and Shenzhen, existing home prices have experienced a significant drop of at least 15%. China's efforts to counter currency losses through guidance on its managed currency's daily reference rate have led to the offshore yuan's depreciation against the US dollar. Expert perspectives and commodity trends. Florian Ielpo, the head of macro research at Lombard Odier Asset Management, highlights 2 primary challenges facing equity markets. Firstly, the surge in real rates fueled by positive U.S. economic indicators that align with a robust economic recovery. Secondly, China's economic signals, reminiscent of the challenging summer of 2015, characterized by a troubled housing market and shadow banking system. Turning to commodities, Brent crude has managed to halt a 3-day decline, recording a notable 0.9% increase and trading at $84.20 per barrel. Furthermore, gold has experienced a modest rebound, edging up after a period of trading below $1,900 per ounce for the first time since March. The international financial landscape is experiencing a blend of hopeful recovery in equity markets, coupled with dynamic shifts in bond markets. The nuanced reactions to central banks' actions, corporate performances, and China's economic dynamics underscore the intricate web of factors shaping today's global markets. Key events this week: U.S. initial jobless claims, U.S. conference. Board leading index, Thursday. Eurozone CPI, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.2% as of 11:44 a.m. London time. S&P 500 futures rose 0.2%. Nasdaq 100 futures rose 0.2%. Futures on the Dow Jones Industrial Average rose 0.2%. The MSCI Asia Pacific Index fell 0.3%. The MSCI Emerging Markets Index was little changed. Currencies. The Bloomberg Dollar Spot Index fell 0.2%. The euro was little changed at $1.0886. The Japanese yen rose 0.2% to 145.99 per dollar. The offshore yuan rose 0.4% to 7.3072 per dollar. The British pound rose 0.2% to $1.2755. Cryptocurrencies. Bitcoin fell 1.4% to $28,521.64. Ether fell 1.2% to $1,786.60. Bonds. The yield on 10-year Treasuries advanced 5 basis points to 4.30%. Germany's 10-year yield advanced 4 basis points to 2.69%. Britain's 10-year yield advanced 5 basis points to 4.70%. Commodities. Brent crude rose 0.9% to $84.16 a barrel. Spot gold rose 0.3% to $1,898.09 an ounce. In conclusion, we'd like to thank you for watching Breaking News, Market Analysis. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.